Welcome to The Explainer. Today, we're diving into the nervous energy that's just pulsing through the market. It's Monday, January 19th, 2026, and you can really feel the anxiety in the air. So we're going to break down exactly where it's all coming from.
To really get the vibe of the market today, you don't need some complex chart. Honestly, just look at this image. It pretty much captures the feeling perfectly. Pure anxiety. This is what it feels like for traders looking at their screens this morning. And if you want to put a number on that feeling, well, here it is. This single number tells the entire story. It's the score on the Fear and Greed Index. And let me tell you, it is flashing a major warning sign.
So a score of 22.89, that puts us deep into extreme fear territory. What that really means is that the emotion driving decisions right now isn't careful analysis, it's just straight up panic. This is a clear signal that investors are running for the exits. So that leads to the big question, right? What is behind this widespread panic? It's not just some random feeling. There are very specific triggers. So let's dive in and really dissect this fear.
The first thing you have to understand is that this anxiety isn't homegrown. Nope, it's more like a wave of worry that's been washing in from international markets, and it set the tone long before our own market even had a chance to open. And if you look at the global scoreboards, man, it is just a sea of red. From the Dow Jones in the US to Japan's Nikkei, which took a really significant 1.5% hit. These major sell-offs have created a deeply negative backdrop. That drop in Japan in particular is a really loud alarm bell.
And this quote just nails the core reasons. It's not just one thing. It's a combination of renewed fears about a trade war, plus other geopolitical jitters that are spooking investors everywhere and forcing them to rethink how much risk they're willing to take.
So all that negative global sentiment, it's hitting India directly. Before our market even opens, the GIFT Nifty is already pointing to a huge gap down opening of about 170 points. That means we're starting the day deep in the red. And when fear takes over, we see this classic flight to safety. Investors start dumping what they see as risky, like stocks, and they start piling into traditional safe haven assets. That's exactly why we're seeing gold and silver prices climb right now. It is a classic defensive move, a sign that the big money is bracing for impact. Okay, so let's track how this global fear is actually translating into the flow of money right here in the Indian market. Because, as you know, where the big money goes, the market tends to follow. Get this. Foreign portfolio investors, or FPIs, they have pulled a staggering 22,500 crore rupees out of Indian stocks so far in January alone. That is a massive vote of no confidence from foreign institutions this month. But here's where it gets really fascinating. This slide reveals a tug of war. While the foreign institutions are selling like crazy, our own domestic institutional investors are stepping in and buying, and they're absorbing some of that intense selling pressure. It's really a battle between foreign pessimism and domestic optimism. Of course, this massive outflow of foreign money has real consequences. It's putting immense pressure on the rupee, weakening it a lot against the US dollar. And a weaker rupee? Well, that can fuel inflation and create another layer of economic concern for the market to worry about. So, with foreign money flowing out and domestic money flowing in, where is this battle actually being fought? For that, we need to get practical and pinpoint the key technical battlegrounds for today, the specific price levels that will tell us who's winning this fight. Okay, so the Nifty 50 is essentially caught in a tight range. Think of it like this. There's a strong floor of support down around the 25,600 mark where buyers keep stepping in, but there's also a really tough ceiling of resistance up near 25,900 that sellers are defending like crazy. And this options chart, it shows you those battle lines perfectly. See those huge red bars at the 26,000 level? That's a massive wall of sellers creating that resistance ceiling. And then the tall green bars down at 25,500, that shows you where the buyers are digging in their heels to provide that floor of support.
All right, now let's look at a slightly more complex metric, but it has a fascinating little twist. It's the put-call ratio, and it's currently at 0.65. Now, a number below 1, like this, suggests that even with all this fear, some traders are actually placing more bets on the market going up from here, not down. It's like a small glimmer of contrarian optimism.
Okay, so with the big picture clear, let's zoom in a little. Let's look at the specific sectors and individual stocks that are making headlines and really moving the market today. Looking at these sectoral heat maps side by side gives us a great perspective. We can see how today's action stacks up against the trend over the whole week. On the left, you've got today's performance, and on the right, the weekly. So for instance, notice how the IT sector is showing a little bit of green today, but it's still down for the week. On the other hand, you've got sectors like pharma and metals that are under pressure both today and for the week.
So the overall theme here is pretty clear, and it makes sense. The sectors that are really sensitive to global trade and what's happening with the economy, like metals and autos, they're feeling the most heat. Meanwhile, the more defensive, domestic-focused sectors like pharma and banks, they're holding up relatively better against the storm. And finally, you always have to keep an eye on the heavyweights. They can really set the tone. Strong earnings from giants like Reliance and HDFC Bank could provide some much-needed support today. But then, negative news from ICICI Bank and Tata Tech could add to the bearish pressure. It's a real mixed bag.
So, to sum it all up for today, we're set for a nervous session. The market's opening weak, it's likely going to stay volatile as it looks for direction, and it's probably going to be stuck between those key support and resistance levels we talked about. And all of this leaves us with the final critical question for the day. We've seen the storm of foreign selling and global fear. The big question now is, can the strength of our domestic investors stand firm against it all? Will they be enough to hold the line? That is the story we'll all be watching unfold today.